Hello, hello. How are you all doing today? Welcome to the session. Just want to make sure that you can see me okay, you can hear me all right. Thank you for attending early. We have Kaylee and Duan. Thank you for joining a session. And if you are here, if you're attending the session, drop me a message, say hi. Hey Tariq, hey Imad, hey Fabio, how are all of you doing? Good morning, good afternoon, good evening, wherever you are. Fantastic, thanks for that, Simon. Brand new week. How do you like this, the way we have it set up right now with the live market analysis on Mondays? Just getting you prepared for the week ahead. Hey Bjorn, how you doing? Hey Jamilu. Good to see my regulars back on board bright and early. I'll give it a couple of moments before we get started. And if you are new to the session, welcome to the live analysis session with IC Markets. Do drop a message and say hi. And if you're new, let me know where you're joining me from. And I hope you're all trading well. Very choppy price markets over the last week. But I think we should see some better setups through this week. Fantastic. Welcome from Kenya. Hey BL, how you doing? Happy New Year. Happy New Year to everyone who I haven't caught up with since the New Year. And very soon, Happy Lunar New Year. Hope you've all been trading well. Hey Ephraim, good to have you on this session. Must be bright and early in Florida right now. Alright, one more minute and we shall get started. In the meantime, if you are attending a session right now, do help me out with the YouTube algorithm. Click that like button. And that would help us massively. Hey Kelvin. Thank you, Tuan. Alrighty, let's get started again. So welcome everyone to the IC Markets webinar. Today we are going through the live market analysis, just looking at the news ahead or what happened before the news ahead and the way prices are right now to give you possibly some idea of where prices could be heading towards into the week ahead. Alright, so as usual, you know the drill. If you have any questions at any point in time, please feel free to put it into the chat. I am looking at the chat as well, so put it into the chat at any point. I'll be happy to address your questions, trading related questions as they come around. And you have any particular pairs in particular that you would want me to look at or to analyze, do let me know as well. What I would also like to know is, if you have done any trades recently, which is interesting, right? Whether it's made money or lost money, do share it with me. Let me know. I'll look at it and we can see how we could have done it better or even, held on to a trade longer or not. All right. So with that said, quick disclaimer, any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. You all know what I'm going to say next. What it means is that if you do jump into any trades, please make sure you do your due diligence. Make sure it fits with your trading strategy, your trading methodology. You're not over trading, you're not over leveraging. All right, because we do tend to look at a big number of charts and a big number of potential trade setups here. If you do jump into all the trades, I can almost guarantee you that you would be over trading. Okay, so make sure you do your own due diligence before you jump into any trades. So for those of you who are new to the session, a quick introduction of your host, myself. My name is Jin Dao. Most of you already know me as Jin. I have a lot of regulars at this session, so thank you all for being a regular at this session. I have been trading for a long time now. I'm investment analyst at the Everest Fortune Group. Been trading for more than 10 to 15 years. So if you do have any questions at any point in time, please feel free, reach out, let me know, ask a question. I'll be happy to help. All right. So with that, short and sharp, let's jump straight into it. As you all know, the first things I do, or the way I trade, is I'll look at the news first. Right? I'll look at the news, the fundamentals. Based on that, I'll determine where I think prices should be heading towards, the overall directional bias towards where prices should be heading. Then I'll look into the charts to determine whether it aligns with my overall directional bias. Put that together. If it aligns, then I'll get into a trade. If it doesn't, then it will give me a signal to wait so that price turns back to where I think it should be heading towards before I get into a trade. All right. Tuan, I can't recommend you a pair for a good trade or educational purposes only, but let's look at some charts. We might come across something interesting for everyone. All right. Jamilu quickly with the DXY and XAUUSD, that will definitely come up. Jamilu, so I'll do that shortly. Just bear with me for a couple of minutes. All right. So with all that, let's look into what happened last week. Okay. So again, nothing much on Monday morning or Monday last week. We saw prices didn't move too much, right, because there wasn't much news. Big anticipation, right? Anticipation was on Tuesday with Fed Chair Powell speaking, right? Everyone was anticipating that he would come up and say something about policy. But if you paid attention to the details, it was a panel discussion about central bank independence and the mandate evolving views. He didn't actually say anything particular about policy, right? He did just say that they needed to use their tools innovatively in the recent crisis. So prices didn't change too much at that point. We saw some volatility on the dollar index, but then didn't change too much in the overall scheme of things. On Wednesday last week, we did have the Aussie CPI. Right, Aussie CPI is the Aussie inflation data year on year, and it went from 6.9%. It expected an increase to 7.2. What came out was a 7.3%. So what does that mean? Put it into the chat. What do you think that means? As inflation grows from a 6.9% to a 7.3% year on year, what do you think that means? Is that good news or bad news for the Aussie dollar? Inflation is still growing. What do you think is going to happen? Very quickly, Tuan, with interest rates going up, yes. Okay, so it's not that interest rate will go up. It's more that, consider that the RBA would have to possibly continue on with their current path of rate increases, possibly even consider scaling up rate increases, despite their previous comments about, a potential slowdown, because inflation is still sticky to the high side, 7.3%. So we're anticipating potentially further rate increases for the Aussie dollar. And if I jump to the Aussie dollar chart right away, you can see that as that news got released on, where was it, on Wednesday last week, right, as the news, where was it, Wednesday, sorry, just gonna flick back again, at 8:30 a.m. There we go. Right at that point. A brief push towards upside, retrace, but then overall pushing higher on the Aussie dollar. Okay, because of the anticipation that interest rates for the Aussie would be continuing towards the upside. All right, so you got that right, Jamilu and Tariq. Good news. Well, technically bad news because inflation is climbing, but it means that we're potentially going to see further rate increases from the RBA, causing the Aussie dollar to push towards the upside. All right. Hey, I'm Ripal Singh. How are you doing? So that was the news on Wednesday last week. Inflation data for the Aussie from a 6.9 to a 7.3, and then the main fireworks happened here on Thursday evening, 9:30 GMT plus 8. We saw the US CPI data year on year was 7.1%, expected 6.5, and it got released at a 6.5%. All right, so it was released as expected, but the main focus here is that we are seeing inflation growth in the US on a year-on-year basis slowing down from a 7.1% to a 6.5%. So again, jumping to the charts, looking at the dollar index here, I'll move the line right across to Thursday at 9 o'clock. I'll zoom in a little bit. Okay, I'll move it to one just before, just so you can see what happened at that point. Straight away, we saw the dollar index drop significantly towards the downside, right? Drop significantly towards the downside, breaking from that 103 level straight down towards 102.36 or 102.35. Right after, on the hour right after that, it shot straight back up, but then overall continued back down again. Okay, so let me put it out to you guys. What do you think? Why do you think the dollar index shot straight back up? We all know that move. We all know that first move where we saw it drop towards the downside. But why, within the next hour, it shot straight back up? Anyone wants to contribute with a potential view of why they shoot back up? I'll give you a minute to type it in. It was done by the market makers by Suki. What else? Anyone else? All right. So why it shot down as anticipated? Because we saw, it came out as expected. Markets were poised for that potential slowdown. We saw that push towards the downside, but it very quickly reversed back up because let me just check if I can bring up that news easily. There was a comment. No, I don't have it here, but there was a comment from one of the members of the Fed Reserve that said that they were looking at interest rates potentially continuing to go up despite the recent economic data. Okay, if I can scroll, it's going to be a bit of a scroll, but let me just have a look. I just want to find that headline. They're most likely going to continue on at 25 basis points. There we go. Right, am I allowed to move? So we had this report, inflation report today was welcome news and may allow Fed to move more slowly. That was a tweet sent out. But then, there we go, inflation more likely to persist than a simple drop to 2%. That gave one view that we might be looking at, higher for longer in terms of interest rate decisions from the Fed Reserve. And that's the one, right? I expect the Fed to get rates just over 5% and then hold. Okay, so that headline coming in right after the news with the CPI data being released signaled we're looking at potentially higher rates for longer. Okay, So that's why we actually saw this push down because of the news. Shoot back up because of the headline, but then overall, you know that it's just a tweet, it's a a comment. Overall data still perseveres, and we see the dollar index push lower. Why is it pushing lower? Is because as inflation growth slows down, this is going to signal that the Fed Reserve could be more confident to slow down further interest rate increases into the future. And that's why we see the dollar index sliding towards the downside all the way through this morning, traded at that 101.80 level before rebounding right now. Okay, rebounding and then now retracing slightly again. Why is it retracing at this point? It's very important to notice that it did hit that 102.56 level, 102.57 level before retracing back down. So it's hit a key resistance level, failed to break higher, and then now tracking lower again. Okay, so what I'm looking for is how this hour is going to end up, or this next couple of hours is going to end up. Is it going to reject at this resistance level to trade lower, or could it potentially bounce and break above this level back towards that 103 round number? All right. Our previous analysis on the dollar index, we're looking at it to come down towards that 101.28 level. I think that's still valid, but we might actually see this come up, hit that 103 before trading back down again, or turn down from this point. Hey Diana, how are you doing? All right, so that was the move from the CPI data last week. And to add on to that, that was Thursday. To add on to that, onto Friday, we had the pound with the GDP number was 0.5%, expected minus 0.2%, came out at a 0.1. Right, so a lot better than expected. Not as much as previous, but a lot better than expected. We actually saw the dollar, the pound dollar push higher because of this news. And then consumer sentiment on Friday, POM consumer sentiment, big increase here from a 59.7, it was a 59.1, expected 60.8, a big push to 64.4. Consumer sentiment actually gives a leading signal of whether consumers, retailers, households like yourself, how they view the markets. Are they positive? Are they negative about the markets? And we're seeing it increasingly positive, which shows that the economic outlook from their view, or from the general public's view, for the US is positive. So again, another signal that we might see the Fed slow down on future rate increases. Again, on Friday at 11 p.m., if you looked at the news, where was it? Friday at 11 p.m. as the news got released, we saw that push down again. Brief push back up, but then overall traded towards the downside into this morning. All right, so overall pushing lower. Very interesting here that the dollar index rejected this level and traded down. I wouldn't do anything right now. Right, I think it's a little bit too early to get into a trade right now. I would possibly wait for the dollar possibly to close below this 102.20 level, showing an engulfing candle towards the bearish engulfing candle towards the downside. Is going to give us that signal that we're going to see further downside on the dollar index. All right, so I'm looking at, and this is on H1 time frame. From this point, we could see it come down to test this 101.28 or 101.30 level, but it does need to break below this 102.20 level. It's getting there, but it does need to wait a little bit, possibly towards the end of this session or at the hourly mark, we could see that happen. Yep, Diana, it is on Mondays now, just to give you a prep for the week ahead. Okay. So that was last week. That was all the move that happened last week. What's up for this week? What's up for this week? Let's look at it on Monday today. Bear in mind, we're possibly going to see that dollar weakness, but it's possibly going to be in a choppy price action. Why do I say a choppy price action? US bank holiday. It is Happy Martin Luther King Jr. Day, right? So for anyone else who's watching in the US, especially where was it? Who was in Florida? Oh, I lost that. Especially Ephraim, right? Anyone who's in the US, Happy Martin Luther King Jr. Day. So US is on a bank holiday. That's why we might see prices move in a bit of a choppy price action, but overall I think we could see it trade towards the downside. With that, tonight at 11 p.m. GMT +8, we do have the Pound Bank of England Governor Beatty speaking at the December Financial Stability Report before the Treasury Select Committee. Potentially a big news event, potentially going to move the dollar or the pound dollar quite significantly, and I think at this point we could see it be pushed towards upside. So watch out for that. I'll give you further details on that shortly. Tuesday, we do have the Chinese GDP quarter to year data being released. Not too concerned about that. That's going to affect the Aussie dollar at some level, but I don't think it's going to be a big move. And we do anticipate that GDP for the Chinese would possibly not be a great number because it's only just started reopening its borders. All right, so I don't think this is going to move prices too much at this point. But if it does move, it will move the Aussie dollar at the greatest extent. With that, tomorrow as well, we do have the UK claimant count change data. Claimant count change data is the number of unemployment benefits being claimed. So a smaller number, the better. It was 30.5k, is expected 19.8. So we're looking at a slowdown. And if I showed you what happened the last time round, it was minus 6.4, expected at 3.5, came out a big number at 30.5. All right, so this could be a bit of, again, another upset upset to come from the UK in terms of a claimant count, higher number of people claiming for unemployment benefits. Not a great news if it does get above that 20k number. We might see some downside on the pound dollar, but I think with the overall trend pushing higher, might be a brief spike towards the downside before a resumption back up again. With that, the big news, and we'll look at that, I'm surprised no one asked about it yet, is the Canadian dollar, the USCAD, the loonie, because tomorrow we do have the CPI data being released. Right, CPI data for the Canadians being released. Median CPI going from a 5 to a 4.9%, trim CPI from 5.3 to a 5.2. So it looks like we might see the Canadians with their inflation growth slowing slightly. And if I showed you what happened the last time round, it went from 4.9 to a 5. So it's not a given, right? It's not set in stone that we're definitely going to see a 4.9. We might still see an upset. It might be a 5.1, but I think that it's around that level. We have seen the Bank of Canada quite aggressively increasing interest rates. So I think that we might see this slow down to a 4.9, possibly staying at 5, right? But with that said, if it is at a 4.9, if it's at a 5, if it's at 5.1, what that's going to mean is that we're possibly going to see the Bank of Canada continue to increase interest rates, right? Which means that we're going to see that Canadian dollar strength come back into play. And then through that, this is what I'm looking out for. This is the big event. Bank of Japan on Wednesday morning. It's going to happen anywhere GMT +8 between about 9 a.m. to 12 noon. All right, it's tentative. It's always tentative, but it's going to happen anywhere between 9 a.m. to 12 noon. Bank of Japan, previously last week, they have indicated that they might be looking at reviewing their current policy stance about the impact of the ultra easing policy or ultra easy policy and the side effects it's had on the economy. They're possibly going to review that. I'm going to be paying attention to the monetary policy statement onto whether they have reviewed it, whether they're going to make any changes, or whether they have made any changes to their current monetary policy. That's going to indicate that we're going to see potentially higher volatility on the US yen in particular. All right. And then with that, pound CPI data staying about that 10.5, 10.7% data level. Okay, so I don't think we're going to see a big change there. You can see that it's been rather high and not much changes. So CPI for the UK possibly at that 10.5% level. And then through that, onto Thursday, whole bunch of news, but not going to move prices too much. And then onto Friday, we do have, with the annual meetings continuing on, we have a lot of central bankers speaking. You can see that they've started speaking through Thursday all the way through to Friday. Anticipate choppy price action, but I don't think it's going to be an event where we're going to see prices change direction in any particular rate. All right. So there's the question, what does it mean if the Bank of Japan is preparing to purchase more bonds? Does it mean QE and interest rate drops or stays? It might not be so much that they're purchasing more bonds. Let me just go up to that again. So Bank of Japan surprise can't be ruled out. I'm trying to find that line. So the inflation target can be tweaked to range. Okay, so the last time they were speaking about it, let me just try and find that. Where you go? Bear with me 1 second, or 1 minute. Let's just find that headline again. I'm pretty sure that's an easier way to find this headline, but I'm just going to scroll through this for now. There you go. Bank of Japan reviewed due to skewed interest rates in the market despite last month's modification in bond yield control. Right? So with that news, right, Bank of Japan to review side effects of its massive monetary policy or easing at its policy meetings next week. So what it means is that it's unlikely they're going to buy more bonds or talk about QE or change interest rates. They're possibly, what I'm looking out for is whether they're going to slow down on bond buying or slow down on further monetary easing policies, right? Maybe tighten it a little bit, not try and buy as much as previously stated. Okay, Euro CPI on Wednesday could have some move. The Euro CPI could have some move, but the ECB has indicated so significantly that without doubt they're not going to pivot. They're looking at further rate increases. 50 basis points at the next meeting and subsequent meetings is pretty much given. So I don't think that unless we see a massive change, I think that whatever the CPI is going to be, with the stance the ECB is taking on, we're possibly going to see not a huge impact at this point with just the data being released. All right, Fabio. So now let's look at, firstly, I'll clear this out for now. The dollar index, it was at that 103 level, shifted to the H4 time frame. Right, the dollar index was at that 103 level, broke lower, came down as low as that 101.80 level. We saw on the H1 time frame is retracing back down again. right now at this level, I'm not looking at anything in particular unless we see that further downside. We saw it on the H1 that we're looking for it to break below this 102.20 level to signal a potential early signal of further downside. But on H4, it could come down, test, and bounce back up. So that's a key level, and you can see at this point why it's a key level that we're going to pay attention to on the dollar index. Okay, so just be extra careful. No clear directional bias at this point. But with that said, I think Jamilu asked the early question about gold, so I'll jump to that straight up. Where's my gold? Okay, there we go. Look at that. Look at that. The last time I spoke about it, well, possibly the last time, said it was going to test and turn back down. It did that. Take those away. Gold, I had been looking at it. I had been looking at it on the 1900 level, and I was very keen when it broke above that 1900 level. It climbed as high as that 1928, tested that level. With that price action, it looks like we might see that downside. Okay, we might see. I was actually anticipating a possible move down this way before bouncing back up again. But I'm still looking at that upward move because of the way this is moving. Right, we're seeing that upward trend line supporting price towards the upside, but it could come down, test that 1900 level, test that diagonal upward trend line before pushing back up again. If it doesn't do that, okay, so if it does come down, I'll be looking for a buying opportunity back up towards the recent high of 1928. So stop loss just below that level. You're looking at 1:3 risk to reward ratio towards upside, or even 1:2. If it doesn't trade lower before bouncing back up, if it just goes straight up, don't do anything yet. I would say look for it to break above that 1928 level before I would be looking to buy. And if it does break above that point, move that a little bit to the side. Okay, I'll be looking to buy from above 1928. I would say even 1930. So about 1930. And then my take profit on a daily time frame, zooming way out, we do have a level at about that point there, the 1960 as a key level, but I like the body of that at 1930. Okay, so that's what I'll be looking for. Not 1930, 1980, I'm sorry. Okay, so back to the H4 time frame. I'll be looking for the move either, either for it to turn down, test the support level, bounce back up before trading higher, or breaking above that near-term swing high resistance level to trade higher towards that 1980 resistance level. Is it going to move straight up to 1980? It could, but I do think that it's not going to move in a straight line. It's possibly going to break up and do a zigzag towards the upside. So just be extra careful on gold. It is slightly overextended towards the upside, so I'm extra careful as it breaks above towards new highs. The last time it tested 1980 was back in April last year, right? It was back in April last year, and you can see that it got right up there, tried to break above, and then started that big downward move, right? Started a big downward move. So just be a bit patient, wait it out. Let's see whether it's going to break above. You can see that on the daily time frame here. Oops, take that away. On the daily time frame here, it looks like a little bit of a hesitation. So wait it out. Make sure it clears above that 1928 level before looking for a buying opportunity. Fair enough. Jamilu, on the dollar index and gold. With that, I see a Aussie dollar, I see a USCAD, And then Suki with the question, I can't tell direction on the euro yen, pound yen is trending. When I see the 1 month and the 1 week time frame, it shows uptrend. But when I go to daily and H4 and H1, it shows downtrend. Okay, easy way to answer that question straight off is that you have to understand where you are, the time frames that you're trading. Right, you have to understand the time frames that you're trading. If you do tend to hold on to trades, for a couple of days or a couple of weeks even, then looking at a monthly and a weekly time frame might be something necessary, because you're getting a little bit too much data. You want to look at it on a daily time frame, H4, just so that you know where your immediate targets are. Okay, so I'll jump into the euro yen and the pound yen shortly. Just bear with me. The text you have proof. What? Okay, I don't know about that. All right, so with that, let's look. I want to share with you the US yen. Okay, why I want to share with you the US yen is because this was a trade I got into early this morning. M15 time frame at, where was it? Right about there. Okay, so what happened, what we have here was this morning. This was the start at Monday. I saw this push towards the upside, but we saw the dollar index weakening. We saw it pushing towards the downside, and then we saw the yen push lower. All right, as we saw the yen push lower, remember this on the M15 time frame. What I actually jumped into here was I actually saw it consolidate, because this pushed lower below the starting point of the day, right? As it pushed lower below the starting point, and it consolidated briefly at that point. What I did was that as it broke down from this level, I got into a selling position, right? So I sold at that point. I had about a 30 pip stop loss. I had a 30 pip take profit. And then very quickly, right, I'll zoom it in here. I didn't even wait to hit take profit. I actually dropped, and within that move, I closed out my trade. Because it came close enough to my take profit level, I closed out the trade straight away. Okay, so that was my, I think about a 20 something pip, 25 pip or slightly less move towards the downside there very early at 10 o'clock this morning for the US yen. Very happy I closed out, because as it reacted off that 127.20 level to push back up. Oops, zoom out a bit. Right now it's pushing back up. Why is it pushing back up? It's because of that dollar strength. Why do you choose that to be the TP? Because 1-to-1 ratio. Yeah, I had it at 1-to-1. Just because, again back to the M15, I had let me move that down a little bit. I had the round number at 127 there. Okay, so if I sold it, considering that I sold it at about, where was it again? About that point there, 30 pip stop loss. I could have put it to that point, which was about 50 pips, but then I didn't think that, it's going to come down towards the level. There wasn't a real reason for price to push down that significantly. I wanted a quick scalp, and that's why I had it at 30 and then closed out even before 30 as I saw it bounce back up again. If I'm not wrong, applying the Bollinger Bands to it, I also saw that price actually, how do I do this? Okay. I actually saw that price was outside of the Bollinger Band, and to me, that's a signal that we might potentially see price push back up again, right? Reversal, and that's why I closed out right at that level there. All right. So that was the view. No worries, Desiree. Sometimes it happens to me, 1 pip to achieve TP, then reverse. Hey, that's why when I've got a trade running, I'm watching it. I'm making sure that, I'm looking for reasons to close out a trade for example, outside of Bollinger Band, or it's come close to the level before bouncing back up, and then I'll look to get out of that trade. Let me see if I can do this. All right. I don't know. I'm just clicking random things. We'll see. Okay. So now with the US yen bouncing back up, right? No worries, Diana. With the US yen bouncing back up, it's all going to be dependent on, I would say that it's a short-term move. Any move towards upside will be short-term because it's dependent on the way the dollar index is moving, right? You can see very similarly that move towards upside. If I look at the dollar index, it's also that move towards upside. I think that we could actually see price climb back up. See you next time. Take care, Diana. Catch you soon. All right, we could actually see price climb up towards that 129.60 level. If we do see the dollar index continue to strengthen back up again. But bear in mind that on Wednesday we do have a big news from the Bank of Japan. Okay, so just watch out for that. What I'm looking for, what I'm hoping for, is if price climbs up towards that 129.60 level or 130 level, anticipating that dollar yen to drop again. As the yen strengthens, then I'll be looking for selling opportunities from that point back down towards the key support levels of 127. Very good risk to reward towards the downside, especially if we see that rejection of that 130 level. All right. Now, with that said, we'll look at the Aussie dollar. Okay. How many of you guys remember the last time I spoke about Aussie dollar, I was looking for a potential reversal on the Aussie dollar. It was at this point, right? I'm pretty sure I told you guys at this point, as it was reacting off that that 0.6950 level, consolidating, I was looking for that reversal, and I was anticipating that if it did break below that point, 6872 or 6870, I'll be looking to sell. Big strong move towards the downside. Didn't happen. Okay, didn't happen. It hit that level and bounced back up. But as it moves back up, right now you have seen the Aussie dollar test that 0.7015 level and then trade back down again. Again, not anticipating anything at this level. I'm looking for price to react to the 6946 or 6950 level. What am I looking for? I'm looking for this to break downwards, right? To break downwards. A little bit more cautious, not looking to sell it down at a big reversal at this point because it's only broken that level. I would say that if it can break down from this level, can it come towards 6875? Then at this point, it'll be a decision. That momentum towards the downside could see the Aussie dollar push lower towards the next key levels at 6723, or it could at this point bounce back up again. So I wouldn't do anything at this point. Look for it to break below this support level of 6946 towards the downside. I'm looking for that point. So two decision points, one at this level and two at this point. Is it going to break or is it going to bounce? And the next one, is it going to break or is it going to bounce? I would stay neutral on Aussie, especially with the Chinese data to be released tomorrow. Was it tomorrow or the day after as well? Okay. Hope I answered your question there, Kelvin, on the Aussie dollar. If it does have a big reversal pushing above that 7015 level, where could it get to? Zooming out right across, previous swing high in August 2022 was at 7122. So we're looking, if it does break above 7015, it could climb towards 7122. Fantastic. Thanks for that, Kelvin. And USCAD. That's the one. Big news ahead for the USCAD on the loonie. Back to the H4 time frame. Clear it out a little bit for now. Okay. Big key level at 1.3437. Resisted several times. And the key level here at about 1.3346 or 1.3345. Hey Alfred, how are you doing? Okay, so right now nothing at this level, but we do know that we have CPI data for the Canadians to be released, and that's going to happen tomorrow evening, 9:30 GMT plus 8. If we do see the news being released and it's higher inflation, that means that we're going to see the Bank of Canada with further rate increases. We should see a strengthening in the Canadian dollar. If we do see that happen, then we're going to anticipate that price is going to come down and break that level and trade towards the downside, right? And trade towards the downside. So, where's the next support level? Zoom out and have a look. We do know that we have a key level here at about 1.3235. If you were not going to monitor it too much, as it breaks that level, you could be looking at below 1.3345, so about 1.3325, about a 30 to 40 pip stop loss. Take profit about 80 pips or 1:2, 1:2.5 risk to reward ratio towards the downside there on the USCAD, towards that key swing low and support level at about 1.3232. Okay, so relatively straightforward there on the USCAD. Could it break above? Could it bounce higher? Most likely, most possibly could happen. But if it does break up towards upside, then I would stay away. It would be against what we expect. I wouldn't look for a trade on the USCAD at that point. All right, makes sense there for you, Jamilu. With that, let's look at the next one on the euro dollar. All right, the euro dollar. All right, let me do this again. Okay. The euro dollar at this point on the H4 time frame. Clear out the lines for now. Zoom out right across. Okay, so it's gone up, tested that 1.0869 or even as much as 1.0873 level before trading back down, right? This was today that we saw it hit that level and turn back down. Watch this big strong upward move on the euro dollar. Anticipate this upward move to continue. So we're looking for this upward move to continue. You do have that big strong trend line, but I think that with the way price is moving, if we do see some dollar index strength continue, it's sitting right there, but if it does continue to push up slightly towards the upside, it would give us possibly good buying opportunities, because I'm looking for my levels firstly at 1.0750 and then more at a nearer level 1.08, about that 1.08 level. Okay, 1.08 level. So I'm looking for this to come down, test, or from here bounce towards the upside, looking at further upside on the euro dollar. If it does, but I wouldn't do anything yet. Either it comes down, test, and bounce, then I'll be looking for a buying opportunity from this point. Firstly, towards the previous swing high, about 50 something pips, stop loss about 20 something, 30 pips, or 1:2 risk reward ratio towards upside. Then only if it breaks above this 1.0873 level, I'll be looking for a buying opportunity towards the next swing high at about 1.1164. Very high level there. A big, potentially big move. So you might want to split it up slightly with about a hesitation area at about 1.0970. Alright, so we can split this move towards the upside. If it breaks above the recent high level, you could be looking for about 80 pips towards upside, stop loss about 30, again another 1:2 risk reward ratio towards upside. Answers your question there, Shahab and Chris. And then US 30. Sorry about that, Eric. I'm jumping to US 30 right now. Okay, let's clear out some of these lines. So US 30, we have a good key resistance at 34,589 there. We saw it hit this level and then retrace, well, not retrace, correct towards the downside. This was in December last year. Alright, December last year, pushing back down. And then from there, we do know that we have a big key support at 32,565. Right now, it is almost at that same point that we saw that reversal towards the downside on the 14th of December. Okay, so I'm looking at this. If this pushes towards the downside, what it means is that we're going to see, the index and equity markets slightly inversely correlated. So if we do see this push down, or the way we've seen this push down now, could be because of the dollar index, but I'm looking for this to retrace slightly before possibly continuing towards the upside. Okay, so how could it retrace, or where could it retrace down to? Let me do this. Right, so I think that by looking at it, we do have a 23.6 level here, but not a very key level at this point. I think that 38.2 will be a nice strong level. So we could anticipate that price could come down, test 38.2, and then push back up again. Right, overall, you can still see that it is trending towards the upside. Right, trending towards the upside. It would be breaking a diagonal upward trend line. Look for it to break or test that level before bouncing back up, or if it breaks, hit that support and then bounce back up again. Alright, where could it get to? It needs to get past that 34,600 level, which is what we saw here, before we're going to see further upside. Good stuff with that. Pound dollar. Have we done pound already? Not yet. Alright. I will try, Simon. I'll try. Got two more. I have pound dollar. There's 100 and BTC USD. Alright. Pound dollar. Further upside anticipated. I mean, we spoke about the news already. Claimant count number could cause a small spike towards the downside, but we do have CPI data looking like it's going to stay towards the upside, possibly going to encourage the Bank of England to talk about further rate increases. We do have the Bank of England governor speaking tonight as well, so just bear in mind we do have a key resistance level here. Oops. Oh wait, what did I do? Go back. Okay, we do have a key resistance level here at about 1.2428. It does need to break above the immediate swing high at 1.2270. The way it's moving, I think that we could see that happen. It does have a level at 1.21, so wouldn't do anything right now. I'll only be looking for it to trade up, break above that 1.2270 level before we could see further upside towards that 1.2428 level. Alright, Answers your question there, Kelvin. And then very quickly the NAS 100, and then after that Bitcoin. Well, look at it. It's tested the resistance levels, looking like it's going to retrace. Not ready. I wouldn't be looking to sell it down because of the way price has respected that upward trend line. If it does break towards the downside, then we could see it turn down. I'm more risk adverse. I wouldn't be looking to sell down. I'll only be looking for buying opportunities at this point. So I would say that it could come down. We've seen how it reacted at this 23.6 level. So I think that if it does break, we could see it react off this level before bouncing back up again. So still looking for that upside, but I think that it's currently facing a brief retrace before pushing up again. All right. Yes, Suki, I forgot about your Euro Yen. I'll do that as well. Okay, last two. Bitcoin. Why Bitcoin? Because I know it's relatively straightforward. A big push towards the upside, resisted at that 21,319 level, consolidating at that point. I have no idea. I don't have a fundamental reason on why cryptocurrencies are pushing higher, apart from the fact that we're seeing the interest potential for interest rate slowdown. We're looking at inflation growth slowing down as well. All that put together has moved some attention towards the riskier assets, and that's why we saw cryptocurrencies push up. Happened on Bitcoin and Ethereum. Sit there, wait for it to break above that 21,320 level. Break above that 21,320 level before we see further upside. And where can it get up to? I don't think we're going to see it scale massively at this point, but it'd be key to look at the next level at about 22,520. Right? Safe to say it'll be 22,520. That doesn't mean anything now already. But it does need to break that level. And the way the price, unfortunately, the way the price action is happening at this point could signals for potential retrace or correction towards the downside, which could come down to about that 20,112 level, but overall pushing higher. So, if it does trade down, look for it to bounce back up again. All right, Simon. And lucky last, let's look at the Euro Yen. Euro Yen, this is on the daily time frame. In terms of looking at it on the weekly first, you can see that it's been pushing towards the upside. Right. So the question Suki had was putting it together with weekly and the daily time frame levels. At that point, we see it pushing towards upside, but more recently, it's been trading down. Right. You can see that it's supported by the upward trend line there. I don't know why I have this. Take that away. So now it's come down, hit that level. Now looking at it on the daily time frame, you can see that last time it hit this level, it bounced back up. Right now, hitting that level, potentially bouncing back up again. It is okay to have a combination of a long-term uptrend, a short-term downtrend, and that's what's happening on the Euro Yen. At this point, if this candle closes or stays above this trend line, you could be looking at further upside potential here on the Euro Yen, with the immediate resistance level at about 142.80, or you could even say 143. So it could be looking, right? This is on the daily time frames. Look for that to close out. Could be looking at a buying opportunity towards upside. Take profit, big move. Remember, daily time frame, that's why it's about 300 over pip move towards upside. Stop loss, about 150, so 1:2 risk to reward ratio for the Euro Yen. Alright, so we've covered a lot of different currency pairs, indexes, cryptocurrencies. I hope you found it useful. If you have, put it into the chat. Let me know. I'm looking forward to your feedback and comments. And remember, as we come to the end of the session, trade well, trade safe, have a happy Lunar New Year ahead, and Happy New Year for everyone else. Do take care, and I'll catch you again. I'll be here next week again, I think. Oh no, next week is a holiday, so we'll see. Just subscribe to the channel, hit the like button, subscribe to the channel, and you'll be notified of the next session. Take care now. Bye bye.